So, first of all, without any further ado, trading opportunity number one, USD versus the Japanese yen, pending order, 0.25% risk based on a 1 to 2.6 risk reward profile. Good afternoon, ladies and gentlemen, and welcome to today's Markets Now session, the Market Recon public event. Hope you're all doing well indeed. After a big CPI event yesterday, still looking at the fallout from that taking place. Does indeed seem as though the Fed will stay on track for a September rate cut at this stage, which I think is quite surprising. That is only information gained from how much commercial money was put into the market against against rate cuts. So the likelihood of the rate cut happening is actually increased from that latest CPI print. I can't see it happening. I don't know if I'm missing something that everyone else seems to be getting a hold of, but I don't see it. I think yesterday's CPI was pretty indicative that inflation is not going anywhere, and we haven't even seen the fallout from the tariffs yet. So I'm not seeing it. I'm really looking forward to September, though. I think it's going to be an incredibly interesting month, certainly. But anyway, that being said, good afternoon to you all officially. Welcome to the Markets Now session today. We are going to be digging our heels into the markets this afternoon in an attempt to start building out our order books and getting some positions up on the board and live. Now, as a result of just circumstance more than anything, apart from the market orders we were carrying out yesterday for the CPI event, we have been completely and utterly clear this week. So things are moving very, very slow. Hopefully, though, today is going to be the day where we see a lot happen. That midweek Wednesday point is usually quite volatile. Wednesday or Thursday, it can be quite choppy, and usually a lot of trades can be taken. So that's what we're hoping for today anyway. It's going to be a very utilitarian session, straight to the point, what we're looking at, why we're looking at it, uploading it into our brokers as we work our way through, on the basis, of course, that they are pending orders and not market orders, and really just tying it up from there. So we're going to work our way through FX, energies, metals, indices. So, well, maybe not predominantly in that order, but something like that. So let's get... Actually, sorry, no, wait. Before we get going, we have no schedule reports for Wednesday that is worth mentioning, but we do have tomorrow's PPI, and I wanted to bring that to our attention. Because if we're in anything US that is not completed by tomorrow afternoon and we are running near on the break-even point, we do need to remember to cut that. And if we're running in profit, then I would highly suggest bringing your stop losses up to lock in some of that profit, just to offset some of the inherent risk that we'll be taking on by keeping those positions live when that news event is released. So I just wanted to put that, I don't know if you would call that necessarily a disclaimer, but I wanted to put that out there so everybody is absolutely clear. Yeah, that's fine. Okay, cool. Right, so let's get stuck into it then, guys. So first and foremost, the DXY, and looking at where that one went as a result of the CPI. We haven't really seen too much. The DXY did crumple a little bit, comes down. It's actually... We've still, like I say, still seeing the fallout from that. We've come down to this point of liquidity in here, which I marked out yesterday. It has officially achieved that, and we've kind of been bouncing back from that one at this time. To say that the DXY is going to continue declining at this stage, I think would be a little bit of a gambler's sentiment. I think we need to see the break close and the retest of that 97.60 point in order to get the confirmation that the dollar is indeed going to continue to the downside. What this does mean, however, because of the sizable move that we've had below, is that something like the USD yen might be really nice for a buyback opportunity, and that's on the basis that we can indeed get the breakout above these major points of liquidity that we sort of hammered our way through based on the news event yesterday. So instantly, I'm seeing money on the table here. USD yen, we got this major point of inflection. That's at 4:30, ends at 3 a.m. Nice big point of inflection there. We've got the break close and the retest, which has been really, really nice as well. But we have formed a bit of an intraday double bottom down here, and the market is having a knee-jerk reaction as a result of hitting it. This leads me to believe that the money is changing hands around here. And I would think that if we get a breakout of this level in here, we could possibly look at the point in which the price comes back up to meet that previous high from the inflection point, meaning that we have got now a really beautiful trading margin to utilize for this afternoon's USD yen trading opportunity. So, first of all, without any further ado, trading opportunity number one, USD versus the Japanese yen, pending order, 0.25% risk based on a 1 to 2.6 risk reward profile. The actual risk profile of this one is incredibly low at the moment. We have no major fundamental news events. We don't have anything even happening behind the scenes today that we need to be highly aware of. So it really should just be a nice organic trade straight the way back up as part of the broader correction after yesterday's collapse of the dollar. Is it going to make it up to 148.050? You know, do I have a strong bias at 148.054? I would probably say it's a bit more mixed than strong. We have had the sell-off for the right reasons. I outlined those reasons yesterday in the CPI event itself. So if you haven't seen that, please feel free to go and check that out after this session today. My feelings at 148, it's maybe a little bit optimistic, maybe a touch optimistic, but I still am confident enough to put money on the table for it. So USD yen long, and that's what we're starting with. I'm not going to take a short from here because we're too far down. So it's only going to be a long for this one. Sorry guys, 2 secs. Yeah, that's fine. Yeah, so that's that. So moving on, next up, USD Swiss. Again, really nice big sell-off here as a result. Obviously, we're looking at some risk on off currency crosses here. I wouldn't really say that that's the main point. I'd actually be looking a little bit further up than, well, actually, to be honest, team, I'd probably be looking at that as being the primary floor. That's quite a sizable way up, so I probably wouldn't be... actually, hold on a moment, because that in there is quite nice as well. Probably have to increase the width on that. Sizable area, isn't it? Yeah. So I know for those of you who aren't, obviously with me every single day, I know we've got a few of you in the room at the moment. Good afternoon, Jack, Cortim, and Matthew. Good to see you guys. The reason I've just zoomed out here and taken a moment with this one is, again, it comes back to building the market context. It's getting a broader view, because a moment ago, if you're really zoomed into the market, you're looking at the market like this, and you're looking at these little areas, it's not really building the context too well for you. So it's always good just to have a zoom out and look at the broader context to understand where the price is really trading relative to a larger batch of data, historic data. So now we can clearly see that this is quite a decent point of liquidity in here, but it's relatively new, it's relatively fresh. And we also have other technical sort of areas up and around here at the moment. So this is not a bad trading margin. We do have the median sitting right bang in the middle, and this is the area in which price is actually, even though it's broken through, this area has withheld price from traveling beneath and above at times. So like this area here, one of the most recent examples of this taking place, where the market comes all the way down to this area and then knee-jerk reactions away from it again, and we actually end up having quite a rally. So it's not going to be the margin for us today because there is too much technical risk involved. The path of least resistance isn't quite there for us. So we're going to move on. So let's have a look at the NZD USD. Let's have a look on the daily here. Nothing builds context like the daily time frame. So daily time frame at the moment, we don't really need to look too far back in time. We know the margin high is 62.94. We know the low margin is 58.53. We're trading between these 2 points in time at the moment, so that's absolutely fine. We're not going to run the risk of that floor being achieved in the next sort of 24 hours, let's say. And we've got a nice high level up there as well to work with, so that's really good. And we've got quite a nice margin now available. So if we go back down to the 15, this margin is absolutely whopping, to be honest. I mean, it's a really nice margin, but we're not going to be looking to take the entire or the entirety of it in one particular trade. So we're going to be looking at the ceiling, previously used, now acting as floor. That's going to be around 59.70. Market looks like it's coming back down there for a retest now. We haven't actually had a retest yet, so that makes perfect sense. That previous high is actually really nice. Why is it nice? Because it is the retest point of another technical area in previous price action. So just there. What this does mean now, if we zoom right the way in, now that we're looking at the sort of intricate areas of the price action, is that if we get the retest and a nice structural point is formed at around that 59.73 area, we can then look for the continuation back to the previous high, which is instantly a very high probability with trend trade idea. So this one's not going to be able to be a pending. This one's going to have to be... actually, let me retract. Let me retrace there. It can be a pending order, but we have to wait for the retest completion, which is for the price action to come down here. We need to wait for a structural point which is formed. So the market's going to come down here, form another candle, and then it will be the first green candle after the end of the reds. So if you imagine red, 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 and then a green candle shoots back up, it's going to be at the open of that last red candle. So that would be the trade idea. So if you're a little bit confused then, let me... do we have Ghost? Where's the Ghost? Yeah. So we come down here. And then... yeah, something like that, right? So let's say, for example, that this is the last green, the last red candle of the move. That there is going to become the break of structure. So when we get the next candlestick forming, which breaks above that level, then we'll be in the trade and we can take the long. But we have to wait for liquidity to be achieved first. Then, of course, after liquidity is achieved, you can then place your pending order in, so long as you have the breaker structure to actually utilize. Just for those of you who are possibly not, super equipped with it at the moment. Okay, so that's going to be trade idea number 2. Now we've got a rough approximation of what the risk reward will be. I mean, that's yielding a 1 of 2.7, but it is hypothetical, of course. The breaker structure might not take place until 59.78, by which time you're going to be losing, 0.3 off that. But anything above a 1 to 1.9, 1 to 1.8, 1 to 1.9 is absolutely fine. That's our bread and butter. We like these. So don't worry about that. I think that's going to be a pretty close estimate. So NZD USD in the green. Right, next up, NZD Japanese yen. Now we've already got USD yen in the crib there as well. So I tell you what, guys, I'm sorry, I've just realized I'm working on my wrong chart. I like my DXY to always be readily available. So NZD JPY, as we were saying, daily time frame, big sell-off, correction taking place, not really that much of a nice transition period either. Very itsy bitsy price action, not really too consistent here across the board. We know that there's a lot of commercial interest pumping into the Japanese yen. Just not really feeling it with this NZD JPY at the moment. It's not... yeah, no. I'm going to give that one a miss. Let's have a look at NZD CAD. So we're coming into big liquidity very soon on this one. Probably considered a minor on the daily time frame in comparison to the big major up at the highs. So that's a decent trading margin in there, but we're nowhere near that yet. Certainly could be forming a bit of a W reversal on the daily for the next leg up. We have been trading in this consolidatory form for a while now. Price equilibrium has been really rampant here. So equal number of buyers and sellers in the market. When it does end up going, I think it's going to go big this one, but I'm just not seeing the opportunity for us here right now. So possibly going to give that one a bit of a pass as well. Let's have a look at cable. Cable's had a really nice run recently. Really nice, actually. Dollar weakness. Pound getting a bit of a bid at the moment. Coming up to big liquidity there as well. This is quite a prominent area. We can see this by previous price action. Lots and lots of points of indecision along the way here. And now we've come up to it again. Recently, we actually had a huge sell-off as a direct result of this one. So that's from 135.80 all the way down to the floor at 131.55. Very, very interesting. Could we see this happen again? Well, I certainly wouldn't put my money against 131.50, but I would be happy taking small bite-sized chunks of the move on the way down. So as we can see here, okay, we never got a retest of this point. This point is interesting. It is an inflection point. But is it the inflection point? That's the question, right? Because if I bring that zone, the same exact zone, just down a little bit, I can see that actually we've had an inflection point here. This is a break-close retest which ultimately failed. And then we've been using this underneath it as this area of liquidity for quite some time before getting the big breakout. So actually, if we think in terms of where the major money bar is, okay, this is going to be some good analysis for you guys here. You can pick up a few tips. You see this bar here, okay? This is the major money bar. Now this, I literally just made that name up off the top of my head, okay? It's not technically called a major money bar by any stretch, but that is where the money is. You can all see it, it's clear as day. This is where we originally had our break of structure, in this area, right? What's the problem with that? And this is a question now to you guys, okay? We're looking at these two bars. What is the problem with this being the true break of structure, or the fact of if it is or it isn't? You got any idea? Hey, Scotty D, good afternoon. Yeah, no problem at all, mate. Braden, I've just caught onto your question there, bud. I'll get back to you. So, Jack says there's no retest. You're quite right, my friend. There is no retest. Price hasn't sat at the levels, so there's no money there. Yes. Yes, you are absolutely right about that. But that's not what I'm looking for. Look at... how can I give this away without giving it away? Okay, let's think about logistics. Let's think about the space in which the bar breaks through this high. Where has the money started pumping into this candlestick? All right, we're thinking about where did things begin? Where is the life cycle? Where is the beginning of this life cycle of this move? Earlier than the break of structure. Yes. At the bottom. Yes, exactly, at the bottom of the zone. The move did not begin at this area, did it? It didn't begin there at 135.25. The move started beginning down here. When we got the initial little breakout there, we started charging up, and then, boom, we had the big push right up to the highs there. So the money in the market was filling into the market throughout the early hours of the morning and overnight. Okay, this is all in these bars. This is where the money's coming into the market. So this is what we call inflow. Okay, so lots and lots of inflow heading into the market in and around this area, which is why we see the area of consolidation. Okay, so lots and lots of inflow until we get positive imbalance of price, which is this area, followed up by boom, the big break of structure. So if we're thinking about where the most sort of, let's say, clear point of money is in the market, the most likely area of a point of liquidity, this is it. This is most definitely it. So if I'm looking at a shorting cable from up here, I'm going to be looking at the break of structure point being about there, which is through the base of the big one and through the high of the little kind of nudge that we had. And then I'm going to have a trade setup, pending order, pending order, but one that I'm going to be putting in the market very shortly, I imagine. And I mean, you can make a 1 to 2 work with stop losses above the top of the N. You can make that work. For me, I probably wouldn't be looking at that, to be honest. I'm going to bring mine down to a 1 to 3. Not because I'm greedy, but because at a 1 to 3, I'm still managing to capture a significant portion of the daily liquidity area above price. And I'm going to have that as a target profit at 135.070. And then this would mark out a really nice rejection. If we look at this one as a rule of thumb, as a good test subject, as the market came up here, we survived in liquidity for a while. We came down, we came back up, we retested the bottom of the daily point of liquidity, and then boom, we just fell. Now the market never moves the same way twice, but it can be bloody close. The other thing is, if I take a level and I draw that from this high down to this high, you can see that this point is higher than this point, which means we are forming a descending point in here at the moment. And if I actually look at the, well, I'm not even going to be able to make that work, but yeah, up there, it doesn't even work. But I would be pretty confident that that's going to go for it. Based on where the dollar is at the moment, let's not forget our dollar analysis. We're coming back down. We've bit into liquidity quite hard down here. We've had a couple of days of weakness. We've got a fallout from the CPI, which is coming to an end. Big decline as well. Let's not forget, before the CPI event, we actually had a big decline. So there's many factors here, all aligning to a cable short, which makes perfect sense. There is, however, the slightly small, maybe baby elephant in the room of the GDP, and well, we've already had the other ones though. We had an unemployment, didn't we? But we do have the GDP rate out for the UK at 7 a.m. tomorrow morning, and it is looking quite bullish. We've got a 0.1% above the prior, so it's actually a 0.2% because it was currently a minus 0.1. We do have a 0.3% reduction in the growth rate, which is actually not a huge metric to be fair, so you don't need to worry too much about that one. But the quarter-on-quarter growth rate up here, look at that. That's a 0.6% decline, team. So it kind of makes sense, I suppose. I think it's probably a mixed bag, and I don't think it's going to save. I don't think it's going to save the pound's strength against the dollar. That's what I'm ultimately trying to say. So I'm actually going to take this trade very soon. I'm going to just pop away, just to pop this into the broker as a pending order, just so I don't miss it whilst we're continuing on in the session here, guys. So just bear with me. Just bear with me 2 moments. All right. Okay. Cool. Right. Let's just go back and I'm just going to touch base on the NZD CAD again for Braden. He was saying, why not a short in the NC? Yeah, why not a short in the NC? I mean, to be honest, there's no definitive reason why I wouldn't want to take a short in the NZD CAD at the moment. It was more predominantly the fact that I've got an NZD USD long down below, and I wasn't quite ready today to take any hedged positions. It might be a nice contrarian view idea to offset some of that risk. That is something that we do on a regular. It's more a personal choice this time around, Braden, I would say, of having not to deal with it at the moment. In a nutshell. Yeah, I haven't really got a better answer for you right now. Just want to keep things super clear, super clean at the moment in terms of just being able to manage longs and shorts. Yeah, cool. Right, let's go up. Pound against the yen. So pound against the yen on the daily. Okay, we've got nice ceiling in there. We haven't really broken above that one very well though, have we? No. Well, there's no way I would short this one. Trend continuation long, but then the daily needs a BCR of this area because this is a daily point without a shadow of a doubt. No way is that anything to do with a 15-minute chart. So I think that's going to be a rock and a hard place, that pound yen at the moment. Let's have about the pound CAD. Absolutely phenomenal. So that's our pound CAD from the weekly report this week, team. Monday, got the break close retest, continuation. Really, really nice play on that pound CAD. Future trading opportunities though, not really ready for it. Again, we're trading above liquidity here at the moment. It needs a daily BCR, that one, not a 15-minute chart one. And yeah, I'm not really there for it. Pound against the Oz. Daily time frame. Let's have a look. Possibly. Oh, no. Same thing with a lot of these pound pairs, but it's not all bad though. It's not all bad because even though we're thinking all known on this one and no on that one, they are all around about at the same point, which means next week we're going to be flush with pound trading opportunities. So it's not actually all bad. This is good for pipeline building. You know, always having fresh opportunities coming through in the pipeline. But yeah, there's nothing I want to do in that one at the moment. We're too far in liquidity to short. We're too far beneath liquidity. We need a BCR to go long. Next week, I would be certainly interested in looking at the trading opportunity between, say, 2076 and the high at 2098. That would be really nice. Something we'll look at. Euro NZD, still got last week's access points analysis on it. Let's get rid of that. So Euro NZD, I tell you what. Yeah, but if we short that, we're just going long NZD again, which means we're doubling up. It might be nice to actually take a... Yeah. No, because that's going to take ages to get down there. So we can't have that one anyway today. That's going to be a tomorrow trade idea. And the highs... I mean, this previous move didn't even hit it. Let's have a look on the 15. It's quite a nice established range, to be honest. It's been in and around there for a while. And Braden's going to kill me now. I actually quite like this Euro NZ. Something about it. I don't know what it is. Don't ask me. But I think it's possibly got some legs on it. That's a really nice established range. Yeah. We have had some problems. It's certainly not been without its problems. And in an ideal world, I would actually prefer that to be the break of structure. So I think I'm going to be really picky with this one. I think that's the deal. I'm going to be super, super picky with this one. To the point in which it might not play out, but that's okay. I'm fine with that. So what I'm looking for here, I'm looking for a long in the Euro NZD, which is, yes, I know, contrarian to the NZD USD, which we've just taken. But I'm going to look for the break into liquidity down here, and then the buyback. And the buyback target profit, we're going to hit a TRF, which is there at around, let's say, 195.90. But if we get the breakout above that 195.90 point, we've got a really nice clean run to at least 196.14. So then I'm going to have my target profit about there. Now, once I line this up, let's have a look. We've got entry, we've got TP, which is going to be situated about there. And we're going to have our stop loss probably there, I would say, at a 1 to 2.54 on the risk reward front. So it's actually not bad at all. But remember, guys, okay, you need to be planning for these, because again, this is not just a simple plug in the numbers, pending order, walk away from the screens. You need to put an alarm in the markets. The alarm needs to go down here. When the alarm triggers, you can put the pending order in. That is a pending order alarm. So when the alarm, the way we work, the way we trade, whenever an alarm's set, 90% of the time, if that alarm rings, you've just punched the numbers in. You punch your order in. So that's what we're going to be doing with that Euro NZD. So that's going to be a long. Right, Euro against the Oz. That's right bang in the centerpiece of those two trading margins there at the moment. So no can do. CAD yen. Yeah, we've already gone along the USD yen though. Yeah, doesn't make sense to double up on that one. Very similar setup. So yeah, I'm going to give that one a dodge as well. Our Aussie CAD, by the way, team, I forgot to say, the bloody Aussie CAD's only gone and done it. There you go, look. Waited a while, but we got a 1 to 2.76 at 0.25% risk. That is almost a 0.75 trade net return, not gross. So if you did manage to hold on with me on that one, well done. Good job. That was a really nice trade idea, and it was really well thought out along the way as well. So yeah, very happy with that. Really happy. Lovely trade idea. And we actually ended up holding that one from Tuesday last week right up until Wednesday this morning, 7:30. So that was almost a week long, that trade. It was quite a long one for us. Looking at where the Aussie CAD's at the moment, I want to short it. I really do. I think this looks absolutely fantastic for shorting. Yeah. And I really, really love the Aussie CAD. So I think a nice break of structure for this one arguably would have been about there. Right? And the zone's actually wider than the one above it, so probably about there then. And we've got this high. It's the highest point we've reached actually for a little while since being in this margin. That's fine. And I want to short the AC and back down, but this time I'm not going to be taking it all the way to the low. I'm actually going to be using the BOS level there. And I'm still going to keep that stop loss. That stop loss at 90.31 is just perfect, I think. And that's going to yield a 1 to 3. Even with the damn stop loss up at 90.30, that's still yielding a 1 to 3. And so I'm really happy with that. So we're going to take an Aussie CAD short, and we're going to blow through some of the profits that were made on the next one. But hey, if you can compartmentalize your positions and your assets, your trading assets, this is free trading. This is free money, right? We've just made 0.75% net return on the AC here, so let's just go and blow 0.25% of it on the short. See if we can double our money, even more than double our money, to be honest. 3x return. So that would be good. Right, we're currently at 1 minute past 2. I need to hustle, so let's get going. Next up, we got metal markets. Don't worry about that. That was a deleted trade from the CPI event. So gold at this time, we've got consolidation down here, price equilibrium. We have a case of positive imbalance at price being attempted. It's not being confirmed yet, but it is being attempted. So that's not a bad sign, but the gold price action at the moment is a murder scene, team. It is not nice, is it? Let's face it. Beautiful area of consolidation in here. So lots of inflow, again, use that term. Okay, so lots of inflow from commercial players coming into the market here, which is great. That's good to see. But when I see this representative of our knee-jerk reaction, this is terrible. This is like no trading volume whatsoever. And what does that mean? That means that the commercial moves are not ready to go yet. The commercial players are not ready to go yet. Otherwise, we would have seen a much, much more significant knee-jerk reaction out than we have as we have done here. The breakout is very weak. So I would be anticipating gold to continue, and actually count this as a fake out, possibly on a 4-hour chart or something. We continue consolidating in here, and the real break is coming. And so at this stage, there's not going to be any gold opportunity for me. Looking at the silver market, we've broken up into big liquidity. That's quite nice. We've got a really solid ceiling there. We could be looking at like an AC similarity here. Not surprising with silver. Looking at the fundamental connection, of course, between the two. So, break a structure down below here. I mean, this would probably be a bloody market order at this stage, guys. It's dropping quite quickly down there. Where are we going to take it to? I really like silver. I'm happy looking at actual opportunities in it. I like this floor. Big spike, 2, 3, 4, 5. Then we get retest 1, 2, 3. Break above. We haven't had a retest of it since. So this is making a lot of sense to me. I want to take a pending order or a market order, depending on which one comes first. Target profit 37.98. Stop loss for this one is not unfortunately going to beat the previous high. We're going to bring that down to a 1 to 2.2. So it's going to be really modest. It's going to be gracious still. We're only looking at a point, maybe a 0.52 net return on this one. But it's still a really nice return. Happy making double the money as I'm risking, as always. And the structure looks fantastic. We are trading with liquidity away from the big block up there. Trading margin looks really nice. There's a really nice clear path of least resistance on this one. So all makes sense. I am going to put that as a pending order immediately though, team, all right? Immediately. So just bear with me on that front, please. All right, we're looking at a target of 37,983. All right. Okay. That's going. The spread's already got me in, actually. Yeah, I'm already in. Right, that's fine. I'll pick that up. I'll get the exact numbers on there in a minute. Right, so that's silver, which has already triggered me in. So that's going. Energy markets, where are we at with these? Energy markets have been a bit of a rocky show for me. Not due to losses or anything, but due to the fact that I'm just not getting in any of them. Natural gas is just continuing to decline. Find that a bit surprising, to be honest. I wasn't really anticipating the further decline down below this point. I thought it was going to go back, obviously, as in the market report this week. The demand is there from a geopolitical, from a fundamental point of view. The demand is still there with natural gas. Even if you think about weather events at the moment, it is definitely there. But we're seeing it continue down. The geopolitical situation, the trade situation, it's all kind of the perfect storm for a natural gas demand vacuum to see that really start spiraling up, powering up, sorry. But yeah, it's not being shown, is it? Not being shown at the moment. So yeah, I think we're going to have to skip energies today. I'm still not even seeing anything that I'm too much of a fan of. US crude, UK Brent markets at the moment, pretty stationary. Lots of chip chop in there, but yeah, nothing I'm really too overly excited about. I mean, this has not done anything this week, has it? I couldn't even call it much of an established range, to be honest. So we'll skip out the energy markets and we'll go straight to the US indices. Right on. So US indices today, US 30 Dow Jones powering up 4463.50. Let's have a look on the daily market report. Idea this week for the US indices for the US 30 Dow Jones to reach the all-time high zone. That's up there. So we've still got a bit of work to do on this one. We're not there yet. It's certainly going well. It's work, our forecast is it's moving in the right direction, but we still got some work to do. So if we have this area here as a rough approximate daily breaker structure, we're close to getting that breaker structure inside. And then we've got a superb trading margin between these 2 points in time. Now, what I would see as a worthy trading opportunity is a position, i.e. like this. The problem with this one is the market opens up in the US in about 23 minutes time. We're very, very close to the market open, which means the chances of a break, close and retest prior to this taking place are slim at best. That means that we're going to have to do something pretty hairy. We're going to have to take a breaker structure trade where a BCR is the viable option. And I don't think I've got the salt to do it. I really don't. So on that note, I'm going to have to avoid that US 30 Dow Jones long opportunity unless we see the breakout, the retest, and the continuation. That is paramount. You will not see this on my MT5 track record on the website. You will not see the trading history for it unless that BCR has been done. Okay, you can rest assured. So that is an absolute necessary criteria of this area. Not because this is like some big 15-minute level, because on the daily time frame, this warrants the necessary respect. Just look back in time. You'll see the amount of inflection at this point. The market comes up, it really does back away quite significantly, and on both sides of it as well. Look at the market when it comes down from big liquidity. Bearing in mind, this is big daily liquidity up here. We come down to this level, hit it, boom, huge move in the opposite direction. It needs the necessary respect. So that's what we're going to be working with for that long. Now, looking at the short side for the US 30 Dow Jones this afternoon, we've got this lovely little area in here that we can use as a breaker structure point, and we've got a really nice TP as well as the previously used ceiling. Now, this area in here is a beautiful point of consolidation. Again, lots of inflow coming in here at the moment. Orders accumulating, ready for the next leg. We get the big breakout, and that takes us up to where we're trading at the moment. So the roof of this, the ceiling, can be now utilized as a target profit for a potential liquidity rejection opportunity. So from liquidity through the structural point down to the previously used ceiling. Trading opportunity is going to be taken here. Target profit is going to be down there at around 44,506 with a stop loss at the 50%. Actually, no, I'm going to hold myself there, not the 50% point. It's going to cover the full distance between the breaker structure and big liquidity above. So I'm going to go for a 1 to 2.62 there at the full 0.25% risk as we risk on everything. So that's the Dow Jones. The NAS 100 today is well up in the ATH area. Look at that. Absolutely extraordinary move up at the moment. Tech certainly not staggering as much as all the analysts are writing about, I would say. We've got a really nice short order in for the US 30, so I think a long opportunity in the NAS would make sense. So we've got this area in here. Unfortunately, yes, we've got the perfect criteria already. So that's a bit annoying considering we've still got a good 20 minutes left before the open. That's actually really annoying. All you're going to be able to do at this stage, guys, is just look for breaks of the highest point the market's reached, and go for a fixed 1 to 2.2. So utilize your stop loss first. Put your stop loss wherever you want it. So let's say I want my stop loss there. You're going to drag this slider up until it gets to a 1 to 2.2. And that's going to be your trade for the NAS 100. That's how you ATH trade. You don't need any previous data. Just fix 1 to 2s all the way. And that's about it. Yeah, that's about it. I don't want a short order in the NAS 100, even though this looks so juicy. It looks ready for it. But I don't want to be caught on the other side of a bull market. And this is, without a shadow of a doubt, a bull market. So yeah, that's going to be about it, team. Let me just cover off if there's any questions at all. Let's have a look. So, need a hedge now. Yes, you're absolutely right, mate. Yes, indeed. Yeah. Come on. Let's have a flash at it before I get going. NZD CAD. It does look pretty nice, to be honest. It does. We've got this area up here at the moment. Multiple points of inflection. It does look pretty decent. We've got a really nice point of liquidity. I'm gonna be the asshole in the room now, aren't I? But we've got a really nice area there as well for a TP. The downside to this is we've already moved away from liquidity. So the ideal entry for this one probably would have been about 11 a.m. this morning, but the market has come back up and retested this area. I'm just let's have a look down here. So in this particular instance, you can see I've scaled down to the 1 minute time frame. In this particular instance, you can do things like this to really fine tune your entries if you're looking for a very particular intricate entry to an opportunity that maybe you're a little bit late with or something like that. We're not actually breaking any rules here. We're still following the breaker structure methodology and everything like that, but it's just because the 15-minute time frame doesn't quite give you enough information to utilize this push away from the money area above. Now we know that there is a lot of inflow in the market situated all in and around this area, okay? There are orders all over the market in this gray zone, okay? All big dollar bill signs up there. We've had the knee-jerk reaction, looks pretty good. We consolidated for a little while until this point, which is a previously used inflection point here, breaker structure area. We're getting a nice push away from it now. My issue is, if we get the breaker structure down there, okay, then that, actually, what's the spread like on the NZD CAD? Hang on a minute. So what, execution there would offer me a 1 to 2.33 or something, 1 to 2.43. Yeah, 1 to 2.43. Yeah, that's actually, do you know what? That's actually really good. I think, actually, guys, Sorry for the drawn out voice there. I think that's absolutely fine. So scrap everything that I said before that. I think that's absolutely fine. We're essentially capturing the other half of the move here. So yeah, that seems absolutely fine. So an intraday short, NZD CAD, 82.26 for the entry, 82.17 for the target, and an 82.303 point for the stop loss. Let's go. God, we really racked them up now. So to conclude, we have a long in the USD yen, we have a long in the NZD USD, we have a short in the NZD CAD, we have a short in cable, we have a long in the Euro NZD, we have a short in the Aussie CAD, we have a short in silver, and then we have trading opportunities in the Dow Jones and the NAS 100. Now, let's make no mistake here. We are leveraged in Canadian dollar and New Zealand dollar. We really are. We've got a lot going on with commodity currencies today. That's just the way it's gone. We don't need to worry about overexposure because of our maximum risk per position, so that's fine. Yes, the Aussie CAD did cover it, but to be honest with you, the NZD CAD looks like a really nice setup. So I'm happy with that anyway. I don't know what I was saying earlier. That's fine. I'm a little bit off kilter today. Feeling a bit under the weather. The bloody heat here doesn't help. But yeah, no, that's looking good. I'm happy with that. So ladies and gents, that's going to be it from me today. We are currently at 2:15, which means you guys, well, actually it's 16 minutes past 2 now. So you guys have got 14 minutes to go until the big market open this afternoon. If you have any questions or anything at all that you want to hear about or chew the fat with, please feel free to ping it out into the general chat and I will be happy to pick that up with you as soon as possible. If there is a delay over the course of the next hour, it's because I'm sweating over the US Open myself and managing our open positions from this afternoon. If not, then I wish you all a fabulous rest of the day. Have a great afternoon, and I look forward to catching up with you in the next one tomorrow where we do it all over again. So take care, guys. Trade safe. Have a good one, and I'll catch you then. Bye-bye.